what's the point investing, training a driver, under the age, ideally he was 25 or 20.
When I can't get them insured.
When I can't get them insured.
Yeah.
Or indeed, then the second part is when they're going to go work somewhere else. I mean, the last one, to a degree, is in their own ability to influence by terms and conditions, type of workout, the culture of the organisation. But the first one is a big barrier that's a perception from outside the industry that we can't get them insured.
I think we're at the point now where it's a must-have rather than a nice-to-have, to be completely honest with you. And it's pretty much really an expectation now by the insurance industry. I'd say it's an expectation that businesses have some form of risk management, because if you don't, it very, very quickly goes wrong.
I think one of the things I like about what we do as a partnership is that we explain to the industry and we take them on this journey, and we accept that there'll still be a proportion that want the cheapest price, because we understand the challenge around costs, but the proportion that want to actually move and change and future-proof to a degree. I think how I look at insurance, because we have vehicles in the RHA, is I'm looking at something that future-proofs me, not just gives me a momentary cost benefit.
Ultimately, if you don't understand the complexities, you can't protect somebody correctly. I can't protect your business unless I know how that business runs. And I would say a real key area of that, where we see it falls over time and time again, where we'll get an operator approach us and say, can you look into this for us? And you look at it and it's completely wrong, is goods in transit.
What trends are you seeing as a broker in the industry at this moment in time? Hello and welcome to the next edition of Roadway, the podcast. Today I'm joined by Liam, and we're going to talk about insurance, which is becoming ever more an important aspect of our fleet operations, with the rise in freight crime, with the change in technology, with the change from alternative to different type of fuels. Insurance is not just a day-to-day requirement, it's a strategic investment. So today we'll unpack and talk around where the market is, what the RHA Insurance Service is doing to support the industry, and really what you can do now to start to improve your insurance risk portfolio, if that's the right expression, Liam. So good morning, Liam, and welcome.
Hello, thank you.
If you'd just like to start off by just tell us a little bit about yourself, what you do, your background, and then we'll talk specifically around the industry today.
No problem, yeah. So I've been a logistics insurance broker for 15 years. I've been at the RHA Insurance Services division for the last 4 years, and my role within the business is both broking business for operators and RHA members, but also the partnership between us as a business and the organisation itself, which involves talking at spring and autumn briefings and being involved with things like this, which is great.
Okay. So let's dive straight into the detail. And the most frequently asked questions I get around insurance as the MD of the RHA, why do premiums increase every year? Are there certain type of vehicles that are more exposed to these premiums? And how can operators reduce their liability? All those are big questions on their own. So let's start with the first one. But what might be of use first of all is what trends are you seeing as a broker in the industry at this moment in time?
Generally, the trends that we're seeing currently aren't really to do with volume of losses. It's more actually to do with the cost of each individual loss. There's lots of different factors behind these cost rises, most of them being in terms of actual labour costs after an incident for repairs, the cost of parts themselves, and also vehicle downtime is something else that we're seeing. With the electrification of vehicles as well, that will only ever increase. But also, even if you're driving a diesel lorry, it doesn't mean that you won't be involved in an incident with an electric vehicle. Let's use a Tesla as an example. Because of the lack of technicians on that front, the time that the vehicle's off the road can increase things like credit hire times. So the time that person's in a credit hire vehicle at a cost to your insurance, essentially. That's quite a significant issue at the minute.
Okay. And in terms of, the actual industry itself, and, the challenges it faces, I mean, currently there's a challenge around driver availability, as you mentioned, electrification. The last few years have seen a significant increase, we think, in freight crime, because it's currently not something that's measured on a particularly accurate basis, and that's another one of our key campaigns. What's the key, or what are the one or two key areas that are really driving cost into the price of insurance?
I think there's a sort of understanding amongst not everybody, but sort of large parts of the logistics industry, worries about the expenses behind risk management. And risk management ultimately is going to be the future and is what will help operators to drive down risk and ultimately reduce premiums by doing so. As you say, the driver profile element of it, of course, we know there's a lack of drivers in the market, which is, we feel it's incredibly important to support new people into the industry and young people, and sometimes both, young and inexperienced. And a lot of the policies that we offer will allow drivers from 19 plus automatically insured to drive. No need to notify the insurance company. And then there's just an increased scale of excess dependent on their age and experience. But by doing it that way, you're only liable for any sort of additional payment in the event that that driver is actually involved in a fault incident.
So just, if I may just interrupt you there slightly, because I think you just dispelled the potential one of the myths in the industry, and I'm sure when people watch this, they'll come back at me on this, is that a lot of people say to me, if you're under 22, you can't get insured.
It's not true.
Okay. But there might well be an increase in excess on that because of a lot of experience, but that would be the same if we were driving a car.
Exactly.
So just to
not an increase in premium.
Okay. So you can provide a service where a driver under the age of 21, 20, 19 can be insured.
They could be 19, pass their Class 1 test this morning, they could be automatically covered.
Okay.
On a motor fleet policy.
No, that's fine, because I think that's really important when people are looking to invest in talent going forward. Because one of the things I hear from the industry as I'm going around is, what's the point investing, training a driver, under the age, usually was 25 or 20.
When I can't get them insured.
When I can't get them insured.
Yeah.
Or indeed, then the second part is when they're going to go work somewhere else. I mean, the last one, to a degree, is in their own ability to influence by terms and conditions, type of work, the culture of the organisation. But the first one is a big barrier that's a perception from outside the industry we can't get them insured. So
I think sometimes people use it as an excuse. I've sort of seen that on occasion. I must admit, the membership that we deal with have actually been really quite embracing of youth. I would imagine a lot of that comes down to the need for it, but also, adding an element of vibrancy to your workforce. And let's face it, young, sometimes inexperienced doesn't mean that they don't bring other things to the business. As I say, vibrancy being one of them quite often. But yeah, it certainly is a myth. These people can be insured.
Well, I think it is relevant to insurance, because we did a piece of work last year with Women in Transport called Navigating Generational Change. And this is looking at the 5 generations that are in the workplace. Yeah. And I'm doing another podcast actually on this very subject. And it's really about planning for the future. And when we talk about succession planning, inevitably that means the younger generations, or the different generations, shall we say. I think it's really important that we have all the options open to us, particularly from a driver or a technician, whether this is not relevant to insurance probably, a technician shortage at this moment in time. By automatically putting up a barrier, we are disengaging with that potential incurrency. And as we know, 53% of the logistics industry is over the age of 45. Yeah. Of which the majority from a driver perspective are over the age of 55.
This can only last so long, can't it?
Exactly. There's an inevitability about it all.
The issue is, without actually being able to drive, you're never going to gain experience in the first place.
So just as a total aside, and it's not a throwaway comment, is would you be able to insure an autonomous vehicle for me?
At this precise moment in time, would we be able to find somewhere to place it? I would say it's likely within Lloyd's of London. Would it be a simple exercise? No. The main issue that you have, if we were, say, to talk about composite markets within the whole
composite market?
So a composite market is your likes of Aviva, Allianz, AXA, as opposed to sort of managing general agents like Somerset Bridge or Direct Commercial, for example. But these composite markets tend to be, not always, but they tend to be a little bit later to the party with this stuff. And what you tend to find is that most of this type of business would be placed within Lloyd's of London, or possibly a composite market may have a box in Lloyd's of London. So that's where, with Lloyd's of London being in its very nature, deals with real specialist risks, from things like space launches through to singers' vocal cords and things like that. So that would likely be where autonomous vehicles would likely be placed in the first instance.
And I think it's really interesting, it's fascinating listening to you talk, because clearly a man that understands the subject. And one of the challenges, as in most specialisms, which insurance is a lot of people probably don't understand the words that you use in the context that you use them, because you're used to things like a box or Lloyd's of London. Yeah. And whilst we have a vague understanding, it's about destroying those myths. And one of the reasons why we've had a long, successful relationship with yourselves, and you provide the RHA Insurance is because you've helped us as an association, but also our members to understand that and what is the art of the possible. And again, I go back to the driver point. You can insure drivers who are under 22 or 25. Yes, there might be an increase in it, but you can physically do it, and it's not uncommon to do so, I think it's fair to say.
Yeah.
You've used an expression so far, which I just want you to unpack a little bit, because I understand it, but some of it, I think, but some of our listeners might not do. Risk management. What is risk management? What does that mean?
So if you're to look from a sort of high level view, it's understanding your exposures as a business and what the potential downsides are of those exposures. So risk management can be a wide variation of things to different people within a logistics business, or different areas of which would be more important to them individually. But if you were, say, looking on a fleet basis, if you're looking from a transport manager's perspective, a lot of it is going to be based around the motor insurance risk side of things, and your exposure whilst on the road to motor incidents. And unfortunately, in its very nature, with the amount of vehicles on the road, it's often a logistics vehicle that's involved in a serious incident, with a lot of motorway driving, and unfortunately we see a lot of fatalities, and we've actually seen a fairly high upturn in fatalities recently with and actually more often than not on these occasions have actually been not the driver's fault. Risk management, if we sort of to bring it back to that topic, if you have a camera installed in the vehicle, a forward-facing camera, and you're riding along a road and a pedestrian walks out in between two vans in front of you, that camera footage immediately exonerates you. Where if you haven't got that camera in that cab, you could well find yourself in court having to defend whether you're guilty or not.
And that takes a bit off the premium.
Yeah. It doesn't, it's not a direct correlation.
Yeah.
It's not as in if you have a camera installed, it's minus 5% of premium.
Yeah.
But ultimately, the way that you need to look at it when it comes down to sort of these sorts of policies is they're being looked at manually by an underwriter.
Yeah.
And that underwriter ultimately is who decides what premium they're going to offer.
Reduce the risks and manage the risks because you got the camera.
Exactly. If you're speaking to an underwriter, and if you're a more attractive risk to an underwriter, they're more likely to be keen in their pricing. That's ultimately what it comes.
And maybe it's again, and I know I speak back to now as an operator, which I've not been for 7 years now. But I go back to when I started operating, which was a long, long time ago, where insurance was just something that you went and got a premium for, a price, and then you'd go out and speak to another 3 people, and then you try and beat the one down that you want to stay with, and then you get to the point. I sense that market's changing, because it's become, the industry has become more sophisticated. I'll say in a minute, more sophisticated. The insurance support and offerings become more sophisticated to reflect that, and it's almost now. If you said risk management 30 years ago, it would have been about walk around circle check. It would have been about making sure the driver's done X, Y, and Z. But now, there's technology exists that can tell if a driver's on his mobile phone in the cab.
Yeah.
That if he's fallen asleep, which obviously there's some challenge around that, et cetera, et cetera. So I think one of the things I like about what we do as a partnership is that we explain to the industry and we take them on this journey, and we accept that there'll still be a proportion that want the cheapest price because we understand the challenge around costs, but the proportion that want to actually move and change and future-proof to a degree. I think how I look at insurance, because we have vehicles in the area, is I'm looking at something that future-proofs me, not just gives me a momentary cost benefit, which is important. And unfortunately, the current cost challenges we face probably drives people towards that solution rather than investing in the solution.
Does that make
sense? Does that make sense?
What I would say though is actually this risk management. If we're looking at it from the perspective of it doesn't necessarily make things more expensive, because there more often than not, what you'll find is an insurance company, they're not going to subsidize it as such. But if I'm presenting a risk to an insurance company, I'm saying, right, they've just had £30,000 worth of 4-way camera technology installed, which has got AI systems that notices driver distractions, things like that. The conversation, if you're dealing with a good broker, the conversation with the broker and the insurer will be, come on, let's meet them halfway with this. These guys are doing this in order to reduce their risk. Then why can't you replicate their investment on your front? And that does happen regularly. It does happen regularly. An area where this is particularly sort of prevalent at the minute is new ventures. where we're seeing a new venture business coming into the sector, they could well have had experience working, employed within a larger operator or whatever, but they turn up and say, I'm going to get 5 lorries on the road. Quite often, I think at that point, these people find it incredibly important because a new business, it's very volatile. Obviously, you need to keep the costs down as much as possible, but it sometimes actually takes a little bit more of a firmer approach to sort of get the information across to these people that actually get it right now. Don't fix it when it's gone wrong later, because prevention is better than cure at every single stage.
I think I think it's a really good point, that, and again, notwithstanding the current commercial and cost challenges that the industry and the country is under at the time, as we strive to achieve economic growth, as we look towards the structural changes that are occurring in this industry, as I describe them, which is around decarbonisation, which is around skills, which is around demand. It's our retail example. The high streets disappeared. Manufacturing base is changing, so the demand for what this industry provides is changing, and alarming rates are not. And all those 3 key structural changes are happening at once. So the one thing you need to try and create in those situations is some certainty. And if I was a supplier, so if I was actually giving you pallets for your truck, I'd want to know that you were there for the long term. Not everybody does, and I'm not naive enough to assume that that's how the world works, because I've been on both sides of that spectrum. But that also adds to your credentials as an operator. I would suggest a good insurance, I wouldn't call it a policy so much now, it's a strategy. I would say a policy is a part of your strategy. It's not just a policy that looks after you for 12 months. I
think we're at the point now where it's a must-have rather than a nice-to-have, to be completely honest with you. And it's pretty much really an expectation now by the insurance industry. I'd say it's an expectation that businesses have some form of risk management, because if you don't, it very, very quickly goes wrong. And the end result of that happening is premiums drastically increase, which means your profit margins drastically decrease until you get to a point that you can't operate anymore. So ultimately, the risk management is not just helping your insurance company. It's helping you with your premiums, and also it's the increase in road safety. It's so important.
So in terms of, and I think we've kind of covered these, but I've only really got 3 more questions, which will take a while to answer, Alan. We have touched upon these, but I just want to unpack them a little bit more. So the role of RHA Insurance, as part of the RHA, which is obviously, the RHA is the trade association for coaches, trucks and vans. Or like commercial vehicles, whichever way you want to describe those. What's the difference between our insurance offering and a standard broker? There's nothing wrong with standard brokers, before everybody starts writing into me. But what's the difference between the 2 offerings?
I would, in the marketplace as a whole, the majority of insurance brokers will tell you that they can write haulage business as a brokerage. The majority of them will. It's a very attractive proposition to a broker, in the sense that they're generally larger premiums because of the scale of business, quite often. So that is an attractive proposition to a brokerage, but that can be quite naive, because there's a lot of legwork involved with logistics businesses. You definitely need a lot of expertise within, not just within the insurance sector, but within the logistics sector to understand the complexities behind the business. And ultimately, if you don't understand the complexities, you can't protect somebody correctly. I can't protect your business unless I know how that business runs. And I would say a real key area of that, where we see it falls over time and time again, where we'll get an operator approach us and say, can you look into this for us? And you look at it and it's completely wrong, is goods in transit or freight liability. It's actually worrying, to be honest with you, the amount of times that we regularly offer reviews for members, no obligation review, to go through what you've got and make sure what you've got is actually accurate. The amount of times we'll go through a freight liability schedule, and it's like, it will just have 50,000 full responsibility cover. Then you talk to the person, it's like, well, no, we use RHA 1,300 per tonne. We've got a Barron Wood contract, we've got this, we've got that. And actually, the majority of it is completely either underinsured or uninsured completely. And unfortunately, you're paying an insurance broker to understand insurance. And if you go to a broker and the broker says, oh, do you do this? Yeah, that's fine. And they don't ask any further questions. you're going to end up with something that's not tailored to your individual business.
I think that's the key word. So you actually get under the skin. And I know that there's quite a number of our members that use this service have commented on this, that you become, you educate them on the process.
Yeah.
And then what's best for their business. Because whilst the RHA term conditions of carriage is important to the industry, and it is still a unique and a USP, in some cases it's not enough. And some people think it is, they need to top it up or they need to do whatever, and you can go and help support that.
A plant operator is a great example. If you've got a plant operator moving around £500,000 bits of kit, they're never going to get away with doing it under 1,300 per tonne, because no sender's ever going to allow that. And also, we're a bit unique in the UK on this front, where the conditions are there to limit the liability of the carrier, but in this country we seem to the pressure seems to go onto the carrier to provide the full cover, where other places around the world that's not the case. The actual sender normally has a full cover, like a cargo policy in place to cover their own goods, and then the carrier has a limited liability of, say, 1,300 per tonne as an example. But more and more in this country, it's become the expectation that the carrier must carry the full financial burden of a loss, and obviously that has a knock-on effect, because if you're carrying a £500,000 piece of equipment and then experience a vehicle fire at the side of the M1, you've got a £500,000 claim against your goods in transit policy, which ultimately is going to have an impact on you. Now, the issue is with that, you can't easily pass that cost on to your customer, because your customer will just say, well, I can get it cheaper elsewhere. So then you lose the work, and it's a difficult situation.
Well, it is, and I think what you're describing there is which is becoming more and more evident in this industry, is what we call the race to the bottom. And whether it be from prices or from rates. And you will always get the unscrupulous operator that will go out there and undercut you. And they might have the full insurance. And you will always get the cost passed through to the end of the supply chain, which is ultimately the operator. Or it be a large operator, a small operator, or an SME, which is 85% of this industry. So it is important that part of our role is to give people these options. We can't tell people what to do. Our job's to inform and be informed. But it's to provide people with a partnership and support, from a good offering, which obviously is what RHA Insurance provides. So just moving on to the future. So obviously future-proofing the fleet, it's a big thing. Funny enough, we've got a report on that one as well, which is trying to predict from the industry's analysis when the change to decarbonisation will occur with a momentum, because it's not at the moment. No. It's on very, very piecemeal and on a small scale. A lot of investment, a lot of focus. Battery electric seems to be one of the potential chosen ways forward. Our position is, yes, we should support battery electric, understand why it doesn't work in some cases, and what the solution would be in the alternative fuels, whether it be hydrogen, whether it be continue to develop diesel in some cases. Telematics, also a great support to businesses, but also it can be a great challenge. If you can literally watch your driver scratching his nose, if that's what you want to do. Risk prevention we've already spoken about through monitoring the fleet, and supporting the smaller operator who's not got a back office staff. Those are all really what I see as the future challenges around this space going forward. So a few questions just around that. Is the insurance market ready for electric HGVs? Because I hear a number of examples where, if you're going to take 20 HGVs on the electric, you've got to space them at a certain distance and park them away from buildings and do X, Y, and Z. So if you've got a yard that can accommodate 40 vehicles and you want to put 10 in electric, you might find out your yard is not big enough for the 10 because of what you have to do. Where is the insurance market with electric HGVs?
The answer to your question, is it ready? The answer is yes and no. And what I mean by that is, with the insurance market being so varied in terms of insurer appetite and what they actually want to underwrite, the answer for some of them is no, they're not ready. They will have to move with the times at some point, but I think there are a lot of insurers that historically they work on historic data rather than what possibly could happen in the future. And I think, in my opinion, I think there are some that hang back and wait for things to start happening where they've actually got some data to use to make an informed decision around their pricing and what they will accept and what they won't accept. On the flip side of that, there definitely are insurance companies out there that are insuring these vehicles. I mean, often with no extra premium, I've done one myself where there was no additional terms whatsoever. It was they've used. I mean, granted, it wasn't an entire fleet. With an entire fleet, that in itself comes with different risks, as you say, fire being one of them. But I mean, it was a significant number of vehicles on this fleet, and there was no stipulation in terms of where they should be parked in the operating centre or anything like that.
Yeah. Again, a myth, and well, not myth, maybe an initial 12 months ago, and it spread around the industry, and they were part of the employer's messaging. So, final question: what should operators be doing now, from an insurance perspective, to prepare themselves for the next 3 to 5 years in your experience and how you see the market?
There's a couple of different things here. Now, this first point that I'm going to make quite often can worry people when it's mentioned to them, to be honest. And it's having a long-term agreement with an insurance company of 2 years, 3 years. Now, I think that probably starts with, whether rightly or wrongly, an element of mistrust with the insurance industry, possibly. But from days gone by, like the 80s, if we use as an example, there was some maybe not ideal things happening in many industries, to be fair, but around pricing and things like that. But if you look at a long-term agreement, it's actually the benefits behind it are the rate stability. So as we know, the insurance market can be fairly volatile, and let's face it, generally speaking, the trend is normally upwards as opposed to back down again. There are variations when you're in a softer market, which means there's more insurers willing to price, which increases competition, generally brings rates down. And then you've got a harder market where there's less capacity to do that, which then decreases competition, generally rates increase. But a 3-year long-term agreement or 2-year long-term agreement, what it does is it provides you a fixed set of boundaries on rate increases based on loss ratios, but also rate decreases as well, which is obviously the key here. So you'll have a bracket system, whereas if your loss ratio sits between 0% and 20%, there'll be this fixed reduction, and then obviously the lower the loss ratio, the more premium reduction. And what you're also then not susceptible to is any sort of inflationary rate increases, where let's say you're at £5,000 per vehicle plus tax currently, where next year, if there's claims inflation and it's an additional 5 to 10%, you're not susceptible to that, because this stability program means that is the base rate for every year going forward. If it goes up because of loss ratio, that's based on your own claims performance.
So I think that it goes back to that point we've spoken about already. Gives if you can afford and to choose that model, because that's the model we're talking about. And again, as a trade association, we can only give you that option. We can't tell you to do. It gives you a certainty. And one of the key things in the business is certainty. If you're in a position where you could afford that, so that gives you a certainty around your costs, which you can influence, within a framework. And that's really, I think it's one of the key things, one of the key ways to look at insurance, is going back to your point from the 70s, 80s, where it's a bit like the legal profession, and I say that with a smile on my face, where you only call them when you need them. This is more about part of your business now. This is more about part of your pricing and part of your known costs in 2 or 3 years' time.
Your insurance strategy has a direct impact on your profit margin.
Okay. And you said there was 2 points. That was one. What was the second?
I would say just as importantly as anything else is it's working with the right insurance broker. As I've said before, so often we see a non-specialist dipping their toe in, and the issues can be significant, and ultimately those financial consequences will be down to the operator. You might have half a chance of possibly taking a broker to court for that, but you've got the costs involved with that in the first instance. You deal with a specialist, they understand not just the insurance industry, but they understand the logistics industry, which means ultimately you're better protected, and an underwriter is more likely to offer sensible rates to a broker, that they know is an expert within that sector. So if you get 2 brokers approach an insurance company with risk information, essentially they're going to support the one that actually understands your business, not the one that's just put together a basic presentation and sent them the information. So I would say they're probably the two key areas.
It's a really nice way to end. So thank you very much, and look forward to the next podcast.